main reason for these videos is to show whether or not we are in a bull or a bear market, and then also to determine, could we be close to a bear market? Or if we're in a bear market, could we be close to it turning into a bull market? The way that we do that is not by predicting or saying we think that the market is going to do this. Now, what we're doing is we're measuring probability. And the way that you measure probability is to follow signals, is to follow price action, and then to follow momentum, for example, the two things that we follow very closely. And price action is simply the pattern that the price is showing. So for example, higher highs and higher lows, that's an upward trend, and then a downward trend would be lower highs and lower lows in price action. So with momentum, momentum is simply how fast and how far a market rises in that time frame. So a market that's shooting straight up has very high momentum, and a market that's just gently rising, that has a slower momentum. So we measure that to determine, okay, are we in a bull market, number one, and then secondly, if we're in a bull market, are we close to turning to a bear market? We do this so that we can take the appropriate action and tighten up risk control if need be. So first things we always look at, longer term momentum. Right now, it is still positive. We measure that once a month. Once a month it's measured. And right now, last month it closed positive. If it closes exactly where it is right now, it will be negative. Now, I want to show you a chart of the S&P 500, and then I want to show you another chart. It is more to do with momentum of the market, but then also the internals of the market, how it compares to another asset class. And here's a look at the S&P 500 on a weekly time frame. And what I mean by that is each one of these vertical bars represents 1 week of price action. There are really two things to note here. The first is that we are still within this trading range set from a couple of weeks ago, and we are still in an upward trend right here. It's not good for the S&P 500 on the weekly time frame that we traded back within this larger trading range, but there's still hope for the bulls that they could break it out to the upside. And then secondly is that we've got support down here at these two levels still, and that didn't change at all from last week. We still got support there. And so what that means is that when price action gets around these areas, you want to pay attention and see how it responds. And here's a look at the intermarket relationship that I wanted to show you. It's the 30-year US Treasury bond versus the S&P 500. And the way that you read this chart is that if the line is sloping downwards, it means that S&P 500 is in favor, or it is outperforming US Treasury bonds. And of course, if it is going up, it means that US Treasury bonds are outperforming the S&P 500. And we follow this, and we want to follow it because it gives us an idea of whether or not investors are getting skittish or if they're getting worried about the market. If they're getting worried, then this line is gently sloping up, or it's sloping up very quickly right here. And what's interesting is that you can see that we are starting to get higher lows right here and higher highs right here. And so we'll see if that trend can continue. But at least on the intermediate term time frame, it shows that investors are getting more conservative as far as their allocation between treasuries and the S&P 500, or simply that US Treasuries are starting to outperform. We certainly have a lot of warning signals that we could be close to the end of the bull market. We've got markets that are making new highs, but they're making new highs not so much altogether. We have a select group of investments that are making new highs. Generally speaking, when the market's rising, you want the entirety of the market, so all the different sectors, all the different asset classes to rise together. That would just be a sign of strength. We're simply not seeing that right now. Momentum, the monthly momentum, like I said, we measure it once a month. We measure it at the close. Last month it was positive, but this month right now, as it stands, if it closes right where it is right now, it will be a sell signal, and it'll be really a bearish sign. At the end of the day, you want to pay real close attention right now, because we could be close to that turning point. That signal keeps flipping back and forth. Market doesn't fall out of bed and it typically goes sideways, and that's exactly what we're seeing right now. And so it doesn't mean that the bull market is over, that we couldn't rise. It just means that there is some cause for concern. I don't think that's anything new for those that are following the market, but price action and momentum certainly do reflect that. So, hey, look, if you like the video, thumbs up. And if you have a question or if there's a market that you would like us to comment on, shoot me an email or leave a comment below.